Hi guys, welcome to your own show, MKJ Talks for Investment in English. So guys, how are you? Hopefully you're enjoying my videos. Guys, today I am going to discuss a very important aspect of everyone's life. Recently I have been getting lot of messages and requests from my members who have retired or who are at the stage of getting retired, and also from my young generation followers regarding the retirement of their parents. Everybody wants to know, sir, how should we invest the retirement corpus so that we don't end up losing all our money? Because when you retire and receive a big chunk of money, large number of people will start giving you different kinds of advices, and many of them will give you very risky advice of investing your money in stock market. Somebody will tell you that go for intraday trading. This will keep you busy during your retirement phase. You will not miss your office. Throughout the day you will be busy and you will earn at least 2 to 3% on your investment. But ultimately I tell you, you will land up losing all your money. So don't pay attention to the advice given by people regarding investment of your money in stock market directly. You can invest in stock market, but there should be a strategy of investing in stock market. You know, when you retire, your first objective should be protection of capital. Never let high returns supersede the objective of protection of capital. First and the foremost objective should be protection of capital, and return should always have a secondary place in the list of your objectives regarding your retirement corpus. Now, I will explain you how you can go ahead and invest all your money safely in stock market without risk of losing even a single penny of your retirement corpus. Very simple and clean strategy. First of all, out of your total retirement corpus, transfer 15 lakhs to Senior Citizen Savings Scheme. This scheme offers you an interest rate of 8.6%, which is very high. So you should always invest and take benefit of this wonderful scheme given by the government for retirees. So always transfer 15 lakhs from your retirement corpus to Senior Citizen Saving Scheme. Thereafter, your remaining amount you should put in fixed deposits of different banks. If you want to earn high interest, you can go for new private sector banks as well as new small finance banks. And in the list are say IDFC Bank, RBL Bank, Yes Bank. Then there are many small finance banks like Ujjivan. There are many others also, and they give you relatively more rate of interest, and you will be happy to know that almost all banks give 0.5% extra interest to people who have crossed the age of 60. Since you guys have retired, so you will get this 0.5% interest extra on your deposits. Try to spread your deposits in different banks. Why? Because as per the latest guidelines of RBI, your amount in a bank is insured up to 5 lakhs. So the best thing is, don't exceed your amount much over and above 5 lakhs. You can put say 5 to 7, 8 lakhs in one single bank and try to put remaining in other banks. In other words, spread your money in different banks to keep yourself safe and away from any kind of tension. Now this part is clear. Now what you do is, every month accumulate all your inflows in your saving bank. This inflows in your saving bank will include interest on all these fixed deposits and Senior Citizen Savings Scheme. It will also include whatever you will get as a pension from your employer. It will also include other incomes, like you might have let out a part of your property and you are getting rent on it. So accumulate all your earnings, all your receipts in your saving bank account. Now from this saving bank account, keep aside an amount, say 10,000, 15,000, 20,000, depending upon your level of living, separately, which is necessary to meet your monthly expenditure. Thereafter, leave some amount in your saving bank for emergency purposes. Again, that will depend upon your choice and your comfort. Once you have done this, whatever extra amount is left in your saving bank, straight away transfer it to debt mutual funds. If you are already aware of debt mutual funds and you are investing in it, then you can do it without any problem. And in case you are new to it, no problem, just go for a Grow app link in the description box of this video. I invest through Grow app and I find it very comfortable. Just install it and in no time it will do all the formalities including eKYC, linking your account with bank account, and you will be able to make it operative. And once your Grow app is operative, from there you can apply for different kinds of debt funds. And if you want to know more about debt fund, just search for a debt fund video on my channel. On YouTube, just write debt fund MKJ talks for investment. All my videos related to debt fund will appear. Then you can watch whatever video you want to do, watch at your comfort. Now, this way you have invested all your monthly receipts or earnings into various areas, like you have used it for your monthly expense, you kept some amount in your saving account for your emergency needs, and also the balance you have invested in various debt funds. Now you guys must be wondering, sir, what about equity market? We always wanted to earn high interest and you have not suggested what to invest in equity market. My dear friends, have patience, please wait. Now I will tell you how to invest in stock market. As a retiree, you want to lead a tense-free life, right? Then don't go for any kind of actual mutual fund. It will just be an headache. Don't invest in stocks directly. Only invest in few mutual funds. Go for the best ones. Invest in 2, maximum 3 mutual funds. I will suggest you. First is ICICI Nifty 50 Index Fund. You can use UTI also or HDFC also. Then invest in Sensex Index Fund, and if one more fund you want, then you can invest in Nifty Next 50 Index Funds. So you have to invest only in index funds, and that too maximum 3. One is Nifty 50 Index Funds, second is Sensex Index Funds, third is Nifty Next 50 Index Funds. These funds are available with various AMCs, where you can select ICICI, HDFC, there are many others, UTI also. I prefer ICICI. You may choose whatever you want, wherever you want to invest. You have done this, you have chosen the mutual fund, you have chosen the AMC. Now you have to invest. Do not invest in these schemes every month. Follow a simple strategy which will ensure you high returns from stock market. Just keep accumulating all your monthly surplus in debt funds, right? Never invest monthly in these schemes. Just keep a small or a good watch on stock market. Whenever you observe that our main index, that is Nifty 50 and Sensex, they have fallen by more than 5% of their last peak. Just compare the fall with their last peak. Once they have fallen by more than 5% from their last peak, transfer 25% of your accumulated debt fund balance to these schemes, either to one mutual fund or equally to all the 3 ones. I'll repeat: ICICI Nifty 50, ICICI Sensex and Nifty Next 50. These 3 mutual funds just transfer 25% of your entire debt fund balance into this, following a simple switch process. So that will be very convenient for you. Once you have done this, thereafter keep watch on the market, and if it falls further, for every 1% more fall in the Sensex, transfer another 5% from your debt funds to these schemes. And whenever if market keeps falling, just on fall of every 1%, just transfer 5% to these mutual funds. This way you start investing. And if you find that market has started rising, stop investing. Keep your funds in debt funds and also start again accumulating monthly surplus to debt funds. And then restart this process once again the markets fall by 5% of their last peak. So if you follow this strategy, in a year you will get opportunity once, twice or thrice to switch the balance from debt fund to equity funds. And my dear friends, you will be happy and you will be surprised and sometimes you will be shocked to see the kind of return you will earn from equity mutual funds. Now in this strategy there will be no risk. All your requirements of old age, or I should not use the old age, I should say all your requirement of the second inning of your life will get fulfilled. Your capital is fully protected because that is lying in senior citizen savings scheme and bank FD. You are accumulating all your earnings in saving account and meeting all your monthly expense from them, keeping a small balance in saving account for your emergency need, and remaining amount is invested in debt funds. And moreover, all these debt funds are very liquid. At the time of need, you can just withdraw the money and you will get it in maximum 1 or 2 days, and there is normally no exit load. And apart from that, whenever market has fallen, you are investing or switching your amount from debt fund to equity fund in order to reap benefit of stock market. There is no risk of investment in silly and specific stocks which are very risky. They will move high and low, and since you are not involved in day-to-day trading of stock market, you are not involved with investment in specific stocks, your blood pressure, sugar levels, tensions, all will remain in control, and you will live at least 20 to 25 years more than what is your expected life in normal course of time. Because when you are not having any tension, then automatically your lifespan get increased. So this is the wonderful way of investing your retirement corpus without any difficulty, without any problem. Guys, if you have liked my video, please press the like button and share the video with all people who have retired or who are just going to retire, and also with young people whose parents are going to retire, so that all of us are able to keep strict, you can say a strict clause of protection of capital in respect of our retirement corpus. Now guys, do not forget to subscribe my channel, especially the Telegram channel where I give daily good morning updates. And if you want to become my YouTube member, the link is given in the description box. If you want to become my WhatsApp member, you can WhatsApp me your details. My staff and myself will give you the necessary details to become the member. And if you want to read good books or want to open any DMAT account or any mutual fund account, then the links are given in the description box. With this, I will say bye-bye. God bless you. Happy investing.